Welcome and thank you for joining the quick LifeGuide tutorial on ratings. This tutorial is being produced today, May 10th. All figures that you see are accurate as of today. However, they will likely not be accurate for very long as insurance companies change rates quite frequently. And now that the summer is coming, there will also be some term sales coming up. So please keep that in mind. The figures are for illustration purposes only. They are correct as of today, but they may or may not be correct when you view this tutorial. So let's proceed. In life insurance lingo, a rating refers to a surcharge on life insurance premiums by the underwriter's assessment for people who may not qualify for standard rates. Ratings can be applied in several forms. So in order to look at that, here we have a quotation in LifeGuide for a male non-smoker, regular or standard, 10-year term for $600,000, and we're looking at the rates here. So we see UL Mutual in this case being a number one position at 310, and so forth. So to go to the ratings calculation Illustrator, we go to the third icon from the right, the one that looks like a wrench, this one here. So we'll click on it, and up comes the ratings Illustrator. One of the ways in which ratings are applied, in other words, premium surcharges are applied, is by increasing the insurance age of the person. So, for example, if we want to increase the age by 4 years, so it's an age up rating of 4 years on a 35-year-old, that would increase the rate, or increase the insurance age rather, to age 39 by 4 years. So we'll go up 4 years here, and let's take a look. And we see now that the premiums are quoted on the basis of age 39 as opposed to age 35, which was the input, the original input. That's because the ratings are applied by increasing the person's insurance age. Let's go back, and we'll take that off. We'll put a 0 up there, and we'll proceed. Another way that insurance companies apply a surcharge, a premium surcharge, or what's called a rating, is by percentage. Percentage ratings are sometimes, and quite often in the United States especially, referred to as table ratings. Percentage rating could be any percentage surcharge, however, but when referred to as table rating, the tables are most often in increments of 25%. Table ratings may be referred to as Table 1, Table 2, Table 3, etc., or Table A, Table B, Table C, etc. Therefore, for example, a Table 3 or Table C normally would mean a 75% surcharge on top of the standard premium. So let's take a look here and see what would happen here with 75% surcharge or a Table C or a Table 3. So we will apply here, and let's say for life. This figure here, by the way, before I proceed, is sometimes ratings may be applied only for a certain number of years, after which they will be re-examined, or they may be applied for life and that's it. So let's say that they're applied for life, and let's say we want to use a 75% rating, which is normally either a Table 3 or it may be called a Table C as in Charlie. So let's do that, and we'll put in 75%. Okay. Now, there are various ways in which these are calculated. Depends on the insurance company. So we provide here in LifeGuide's Ratings Illustrator the various ways. It can be the premium plus the surcharge percentage applied to the premium, and then only after the percentage surcharge is applied, then the flat fee, in other words, the fee that would have been over here, and I'll touch on that in a moment. And then there is another way, conjunctive with that, and that is to apply the ratings before or after the policy fee. In other words, including or not including the policy fee. Okay, so we'll leave that at the default, which are premiums plus percentage, which is here, plus a flat fee, which we will deal with in a few minutes. And the calculation is done by applying the ratings before the policy fee is applied, and then once the ratings are calculated to the premium, then the policy fee is added. So we'll do that. Let's take a look at this example now with a 75% rating applied, i.e. table 1 or table C. And here we are. Okay. Let's go back. And let's just think about this for a moment of why these ratings apply, these percentage ratings especially. Percentage or table ratings can be imposed for medical or non-medical conditions. Some examples include high blood pressure, diabetes, combined height and weight being outside the chart, especially obesity. Other examples include a poor driving record, scuba diving, being a pilot or passenger in small planes, etc. So let's zero this one out, and let's take a look at the flat amount that I mentioned earlier. Flat amounts are more often than not applied because of a temporary higher risk. For example, the person goes to on an assignment, a work assignment in the Persian Gulf, or might be assigned by the military to some unstable region, or might be involved temporarily in a hazardous vocation or avocation. So in that case, what happens is that a flat amount additional per thousand is applied. So let's say we apply a $5 per thousand additional for the next 5 years. So 5 years, and we'll apply a $5 per thousand additional. And this is what happens. It gets quite expensive with those additional, but that's sometimes quite justified. So to review, flat amount rating of X number of dollars per thousand of insurance coverage is what we're looking at here. Flat amount rating may be applied for such situations as travel or work assignment to an unstable country, hazardous vocations or avocations, and the like, and are useful for insurers to cover added risk of an unnatural death where such exists. Anything that increases the likelihood of premature death can trigger a rating. What's important to know and keep in mind about the process is that each insurer's underwriting guidelines are not necessarily the same. Excuse me. And may often differ, and they do differ. The guidelines may also be affected by guidelines of reinsurers, and may also depend on whether the reinsurers are reinsuring on a treaty or facultative basis. So I'm going to bring you to this area now of LifeGuide, of LifeGuide, of course, of the Ratings Illustrator. That is an important note to keep in mind. It's important to keep in mind that the same applicant will not necessarily have the same rating at every insurance company, or even for all products of the same insurance company. Again, or even for all products of the same insurance company. Therefore, it goes without saying that any multiple carrier consideration for ratings is a what if rather than a conclusive what is calculation. With that important fact to keep in mind, LifeGuide's Ratings Illustrator includes the important caution notice at the bottom here that states the surcharges ratings that are calculated are intended for what-if general research purposes only and do not necessarily reflect the surcharges or ratings that may or may not be applied by insurers in any specific cases. Please also note that surcharges or ratings may not be applicable or applied similarly or to the same degree or extent by all insurers. For underwriting decisions and for any surcharges or ratings that may be applicable or applied on any specific case, please consult with the respective insurer's underwriters. Again, this is a what if rather than what is. So let's take a look at what would be without any ratings at all. So we'll take this down here, and we'll, of course, this doesn't apply now because it's for 0 years, and we go OK. We see that the top one here comes out as Yield Mutual at 310. We're going to the ratings. We're going to go age up by, say, 3 years. This time, 3 years. We're going to also apply a table 1 or a table A or 25%. And we are going to apply a $3 flat extra this would be a situation of someone who is obese, has high blood pressure, and works in the oil fields of Iraq, for example, if the insurance company will even accept them. So let's take a look what it will be. Okay, we're going from 310 to 2,237. Again, this is an Illustrator. It's not a final say. The final say comes from the insurer's underwriters, and you can often negotiate that. The more complete your application is, the more detailed there is on your application, the more exact you are, the better it will be for your client, and the easier it will be for you to negotiate when it comes to the ratings, and later on, should you wish to renegotiate to reduce the ratings. Thank you very much for spending the time or for investing the time in seeing this tutorial. I appreciate it. Thank you.